Hey everybody, Alan Bramson here. Today we'll be talking about pricing your bids successfully. My company handles all types of bookkeeping work, from the regular recurring monthly close, all the financial statements, accounts payable, payroll, and most importantly, all the analysis that you need to manage your business effectively. If this sounds like it might be helpful to you, or if you'd like to learn more, please click on the link below in the description box and we can set up a free, no obligation consultation call. 28%. According to industry experts, 28%, almost a third of bids in the construction industry are priced to lose money. Pretty shocking figure when you think about it. Now, sometimes money-losing bids are made, and it's not an error, it's actually by design. There could be specific reasons behind it. Now, I'm not saying whether in general these make sense or don't make sense. That's entirely based on the situation. But here are some of the reasons why this practice may occur intentionally. Sometimes a losing bid is made under the anticipation that change orders or additional services might bring them back to profitability. Sometimes the project has multiple phases, and the thought is even losing money in the first phase can be made up if the later phases are won and the price can be increased. Sometimes it's about entering a new market or expanding in one, and it's basically an investment to get your foot in the door. Sometimes it's defensive in nature, attempting to keep your competitors away from luring a good client away. Sometimes the concern is that if there's no work, you might lose staff. So even at a loss, sometimes having a job to retain staff is considered important and worth the loss. Sometimes there's a cash flow issue, so even if in the long run it may not be the best of ideas, getting cash now to pay previous bills and debts is just that important. Sometimes it's more of a marketing function. The idea is if you can showcase your work, you can create demand for that particular service. And lastly, what I call the contribution margin argument. Contribution margin means sales less the variable cost of taking on that job is positive, and those dollars, the contribution margin, can offset other fixed costs. Now, if this method is constantly used, that's a big problem, and you will lose money or be nowhere near your profit targets. But if it's less, if it's more of an isolated event and you have the capacity and there's nothing else that can actually replace it, sometimes it makes sense to obtain that extra contribution margin versus not earning it. Now, there are other reasons why companies may issue bids at money-losing rates. A company may bid using the same type of bids that they've used for years under the philosophy that it worked out fine in the past. But we know with inflation and so many things changing, this is an awful gamble. Sometimes the view is that these are the prices that the market will bear. Well, perhaps there's other ways around that. But if the prices are low and that it will actually cost you money to accept the job, if there's no bigger picture in mind, this is a highly, highly dangerous approach to take. Sometimes the job will be in multiples of either direct materials or labor, usually direct materials, so that they may say direct materials multiplied by 2 or 2.5 or 3. But the problem here is that rarely is there any type of quantification of why those are the right numbers. It is just a practice that seems to have taken a life of its own, but it's not a good one unless you understand precisely what the numbers mean and what costs you're trying to cover. Sometimes it's about matching competitors' pricing, and that's a problem because the competitor may be losing money, or even if they're not, perhaps their situation is far different. Maybe they have a different cost structure. Just because your competitor can do something and perhaps make it work does not mean that it's necessarily something that could not be destructive in your company. And then another reason is that sometimes a company may see a job and it's very similar to something that they've done before and they did okay with. So the question is why many landscapers may resort to the bidding methods that we saw on the last page. And unfortunately, very frequently, the reason is that the landscaper doesn't really have information to act on anything that's better. If the financial history is not correctly recorded in the books, if the financial history exists, but the format of the data and the way it's presented just really isn't usable, if the landscaper hasn't budgeted the future, which is the period in which they plan on bidding these jobs, how can you cover costs if you don't know what they are? The landscaper may not have a set process and know exactly how he should be setting the price for these bids. And in these situations, it's understandable they may use some of the shorthand methods that we saw on the previous page, but really this can lead to the landscaper basically flying blind in terms of the pricing and hoping that they are the right prices. Now, the potential consequences of a poor bid, unfortunately, I think is somewhat obvious. It doesn't mean that every bid has to be perfect, but if there's generally a lack of discipline in terms of how the numbers are calculated and exactly where they come from and exactly what is needed, there are so many problems that this can cause. So first of all, if there's a poor bid, let's just assume that it might be accepted, and if so, it's yours. You're not going to, in most cases, be able to back out. And think about it. You go through all this effort and you do a great job, and then you're either not making the money you need, or you're not making any money, or you're actually losing money. That's a big problem. And what really would make me most nervous, if you don't know exactly why you issued a bid losing money, what would stop the same situation from occurring again? If you're making a decision like in the first set of reasons we talked about a few pages back, at least if you understand where you are and you're making a concerted decision to do something for a specific purpose, I get that. But if you're bidding and you don't really know why you're losing money because you don't have good information, that can be just a real problem. And a lot of landscaping companies don't survive long term, and you really need to follow the best practices to make sure you're one of the ones that do well. There are 6 steps that you really need to go through at a high level in order to issue bids appropriately. And we'll talk about each one of these in a moment, but basically you need to have good information in your books. The information has to be categorized in the right way. You need to own the financials and understand them. You need to project out the results for the next year. You need to allocate out costs, and you need to come up with the markup rates. So let's get into each of these. The first step of this process is one of the most important ones. If you don't do this, it really affects everything else, not just the bidding process, but the bidding process as well. You really need to make sure your accounting records are complete. If they're not complete, they must be fixed. You need to have records that are current and accurate. I've had some clients that basically in the past would bring their books current only before tax time. But prior to tax time, they would constantly be behind and not really know where they are or how they're performing. And that's a big, big issue, as you might expect. The information needs to be reconciled to your bank and credit card accounts, so the entries need to be consistent and correct. Basically, your accounting books need to be correct and in order and reconciled. Now, your accountant or bookkeeper should be seeing to this. If this isn't completed, as I said, almost everything else is moot. All the other points. You need to make sure your books are good. Now, you need to use a chart of accounts that is specific to this industry. It should be split into the same categories that you will be preparing estimates from for this bid. Also, you need to make sure that your profit centers or departments, whatever you call them, items such as design, build, maintenance, irrigation, snow plowing, arbor services, whatever you track, whatever is a significant department in your world, you need either the chart of accounts or my preference is your accounting system needs to be able to break this up and to track at that level. This is vital. Now, your income statement needs to be organized at the following level. Now, there are many detailed accounts under these, but the roll-up points would be revenue, direct costs, and then different overhead costs, overhead indirect costs, overhead equipment, and then overhead administrative, and then of course profit. Now, sometimes there are certain questions of where a certain charge goes. There are some legitimate reasons to put something in one category versus the other. The most important advice is you need to be consistent with this. A very important part of all this is for the landscape business owner to understand thoroughly their financials. Now, I'm not talking about all the mechanics, all the debits and credits and reconciliations. That's for your bookkeeper or accountant to worry about. But what the owner absolutely needs to understand is after all said and done and the books are clean, you really need to understand exactly what your financials are telling you. And your financials have an awful lot to say. Your financials will show you whether you're making money or losing money beyond what your bank account cash balance may show. It may show that of your different divisions, some are doing great in making a lot of money, but unbeknownst to you, perhaps some are actually losing and hemorrhaging money. There are a lot of details that underlie the financials, and if you have an accountant or bookkeeper that's looking into the details in the right way, taking all of your financial metrics that are relevant and benchmarking them against similar landscape companies to see where you're doing well and where perhaps you're lagging, or how some of your key performance indicators are improving or perhaps deteriorating in time. Very important stuff. I have seen many times, based on my either working with landscapers or interviewing them, that very frequently this step is one that's somewhat missing. The idea sometimes is a bit prevalent that it's really the accountants or the tax people or the bankers or whoever who really need the financials, but it's not as much for the owner. And for the owner, this should be one of your most important tools. I can't tell you how many times I have seen owners unaware that even though they were profitable overall, that they had different lines of business that were doing really bad. And since they didn't really see that because they didn't thoroughly understand their financials, they had no idea of the issues, and therefore they were not able to correct the issue until they got down to that level. Now, if you are trying to determine how to price a bid for next year, you need to know what you believe the cost structure, what the costs will be next year, what profit you're shooting for next year. How can you correctly bid if you don't know the cost or the profit that you're trying to hit? You need to prepare an annual budget. Now, the budget will be used in two ways. One, to help price, as we're speaking about now, but you'll also be using this during the year to compare each month results with this budget to see if you're on track or if you need to make adjustments. Budgeting is an animal unto itself. There's a lot of details here, so we'll be discussing that in much more detail in future presentations. But for now, let's assume you've completed next year's budget and you have identified your annual projected sales, direct expenses, those three overhead categories we spoke about, and profit. Now let's talk about allocating out costs. When you're calculating a price for a bid, basically there's three steps. The first you already do. You determine what direct costs would be incurred if you took on the project, whether materials, labor, subcontracts, whatever else. But in addition to that, what you'll be doing is determining how much overhead and how much profit that job should bear. When you add these three costs together, that's your bid. So the formula for the bid is the direct costs plus the overhead allocation plus the profit that is allocated. That is your selling price. Break-even costs is part of that last formula. If you take the direct costs and add the overhead allocated, that's your break-even cost to not lose money on the job. Now, one of the mistakes that a lot of people make is that they don't include overhead fully into the pricing. That can result in a huge problem. If you don't correctly calculate the overhead, it will impact negatively your bottom line dollar for dollar. Now, ideally, you can price, of course, above this amount. This is the floor of your pricing. So if you price at this level, it means you're covering the costs and its share of the overhead and calculating the share of the profit that you need. Now, you can charge more, great. If you charge less, it means you're beginning to eat up some of the profit, and if you really go low, it means you may start losing dollars. Now, if you have this information, and then if you make the decision to lower the bid with some of the reasons that we saw before in one of the earlier slides, At least if you understand exactly where you are, you're at least doing so from an educated position where you know how much you need to cover and you know you're not covering all of it, but for a very specific reason. Let's actually work through an example of this allocation of the costs. Let's assume for this purpose that the landscaping company is mostly labor. Assume it has few materials or subcontractors. We'll talk in future presentations to discuss other situations. Let's suppose that when you completed your budget, your direct labor for the year was $100,000 and your total overhead expenses was $140,000. So what you do is you calculate the ratio overhead divided by direct labor. That would be 140,000 divided by 100,000, or 140% or 1.4, same difference. In other words, for each dollar of direct labor, you will have to allocate $1.40 of overhead expense to the job. Now, let's assume the annual profit you need is 10% of sales, and let's say it calculates out when looking as a percentage of direct labor that it works out to 11.1%. So now let's say a job comes along and you price it out and you believe the direct labor will be $20,000. So the way that you calculate this is first you allocate out the overhead. You take the 20,000 direct costs multiplied by 1.4, which leads you to $28,000 of overhead markup that you have to add to the project. Now, in terms of profit, it's the same logic, although profit is on both direct expenses as well as the overhead. So you take the 20,000 direct, the 28,000 overhead you just calculated, that totals 48,000, and you multiply that by 11.11%, and you end up with $5,333. This is the amount of profit that should be included in your bid for this specific $20,000 project. So your total bid will be the $20,000 direct expenses, the $28,000 overhead markup, and the $5,333 for profit, meaning the grand total is $53,333. This should be the minimum bid that you make, and if you do, then it would cover overhead, assuming your overhead calculations were correct in the budget, and it should give you your the appropriate share of profit that you're looking for. So the take-home messages for this section is this. 1, this calculation that we gave you, this is the minimum bid. You can try to get more, but if you take less, just realize that you're no longer on the path to recovering your overhead and or your profit unless you make it up somewhere else. You need to have complete financial information categorized in the right way for the current numbers, and you need to know what the numbers next year are expected to be. Anything that you miss can affect dollar for dollar your bottom line. If, let's say, you didn't put in a item for overhead which amounted to $10,000, that means if everything else goes perfectly, your profit will be $10,000 less than what you expected. The most important thing here is to methodically and consistently calculate what's needed, and then it's up to you and exactly how you can go about to stay within this plan, or if you need to change things, how much you're going to need to make up. But at least this puts you in the know of exactly where you are. Well, that's our presentation for today. I hope that was helpful for you. Now, as I mentioned in the beginning, our firm helps different landscape clients do exactly what we're talking about here. We can perform all the various bookkeeping functions, but most of all the analysis that will really help you understand your financials, where you are, and help you with the bidding process. If you'd like to talk with us, in the description box below, there's a link. You can set up a free, no obligation call with us. If you're not sure, feel free to set up the call, and worst case, we just talk. Well, that's it for now. Thank you so much. My name is Alan Bramson, Value Added Accounting Solutions. Have a great day.